Hi, this is John Hope Bryant, founder, chairman, and CEO of Operation Hope. And I'm also here, thankfully, on the other side of this pandemic to announce our annual meeting for Hope Global Forum 2021. We all owe a debt to those who paid the ultimate price in 2020. During this pandemic, during a social justice reckoning of Black America, that's 400 years too late, during and after the worst economic crisis for unemployment since the Great Depression, a challenge to our democracy of January 6th, where unfortunately Americans were attacking Americans on our capital. That hasn't happened since the British attacked our capital in 1812. 2020 was a year. And we are on the other side of that, figuring out now what we can do to build our nation back better on all levels. Rainbows after storms. And I happen to be with someone who understands this moment very well. She understands it personally. You'll hear about that in a minute. She understands it from a mission perspective. She didn't sign up for a job or an assignment. She has given herself a mandate in her role as the chair of the FDIC, the Federal Deposit Insurance Corporation. She sees herself, rightly so, as a catalyst for transformational change. Those are my words, not hers. She might describe it or have to describe it differently in her functional role in the government. But I think that federal government and federal banking, specifically regulators in 2021, are in many ways playing the role of the Justice Department in the 1960s, the era I call a second Reconstruction. Which followed the first Reconstruction after the Civil War. And so now we're in this new era I call the third Reconstruction, where it's really social justice through an economic lens. Again, my words, not hers. So we're going to have an interesting conversation that might surprise you. Let me start first by properly acknowledging and recognizing, yes, my friend, but also our leader, somebody I highly respect, Federal Deposit Insurance Corporation, meaning she insures every deposit for everybody watching this broadcast, at least if you're in the United States of America, every deposit. FDIC Chair, Jelena McWilliams.
Well, John, thank you so much. I'm going to ask you to write my obituary in advance. I love that so much. And there's no place I would rather be than here with you having this important discussion on the work that you have been doing and what we're trying to do at federal government level. Specifically at the FDIC. So let's get started.
So let's talk. I sort of teased this up, and I do believe we're sitting in a moment in history, Chair Williams. I think that history does not feel historic when you're sitting in it, just feels like another day. But that doesn't mean it is not, in fact, historic. And in some ways, you've been being prepared for this moment your whole life. Much more so than any other prior conversations that we've had, I believe. Mostly because of your background, which I think would shock most people. Can we just spend a couple moments? I know you probably get tired of being asked this question, but I know you came here with just a few dollars in your pocket, quite literally, and wouldn't even, as I recall, you couldn't even get a bank account initially. Let's talk a little bit about, because I think the presumption is that if you're mainstream, if you look successful, if you are successful today, that life's always been easy and good. Help the audience understand why they should listen to you at all. help the underserved understand why they should trust you at all. Why is your story informative to their life?
Thank you for that question, John. And I'll say it's informative because I walked in those shoes, and I walked in those shoes for probably too long in my life, as I've said several times in different venues, and I repeat myself, but it's a story that people, it's worth repeating, frankly. I grew up on the wrong side of the Iron Curtain. I grew up in the former Yugoslavia in 1970s as communism was on its decline, but it was still a communist system. And in that system, you realize that we're all supposed to be equal, but some are more equal than others. So I grew up relatively poor, lower middle class for sure. Meat was a luxury, and decided that my destiny lies in the United States of America because
Where did you come from? Which country?
former Yugoslavia, Serbia, what's now essentially Serbia, from Belgrade. And so on my 18th birthday, literally, I landed in the United States as an exchange student with $500 in my Levi's jeans pocket. And I was just so happy to be here and to have an opportunity to avail myself of liberties in the United States and democracy and the ability to, do what you can for yourself. But then I realized very quickly that, oh boy, there are many roadblocks along the way. If you come here with nothing, you have no family support, you speak the language with an accent, and it's clear that you don't really belong in this country, in this system. And so my $500 ended up dwindling pretty quickly. But one of the first things I wanted to do was open up a checking account because, in America, banks are safe. And I didn't even know about the FDIC, and let alone, literally 30 years and 3 months later, I would be here talking to you as FDIC chairman. And so I opened up a checking account. That took a little bit of work because I needed the social security number. And then I wanted to have a credit card because everybody in America was using a credit card. But mainly, I actually wanted a credit card because every time I would conduct a transaction to buy, milk or bread at the grocery store, the cashier would say, "Oh, you're not from here. Where are you from?" Which only exacerbated my sense of not belonging. So I was like, if I give them the credit card, maybe we don't have to exchange any words. Maybe they don't hear my accent. And so, of course, I got declined for a credit card because I had no income, no job, no assets, no credit score. Now we call that affectionately ninja, which there's nothing positive in being a ninja in that context. But it happens to a lot of Americans. And today,
can you explain what that means, by the way?
No income, no job, no assets. And so it's a I call it perfect ninja. And so we're at the place now. Well, anyway, so a few jobs later, here I am, got educated in the United States, worked my way up. I had $20 a month left for food on too many months for me to actually even count. Buying milk was a privilege. So I would buy those frozen orange juice things that you can make. And it's a gallon of orange juice out of this little tube that was 99 cents. And so when I look back on those days, I can't but help and bring that experience into my current role of not only what it means to be poor in America and how expensive it is to be poor in America, but how disenfranchising it is to feel like you don't belong because the system is not working for you. So I brought that to my mission at the FDIC, and I'm pleased that we have done a number of initiatives to make us better, make the United States better, make people belong, and make our financial system work for everyone.
And we're going to get into those initiatives in a minute, Madam Chair, but let me roll back for a minute. There's a couple of things. You mentioned the accent. I try to be fair-minded whenever I can. I grew up having drilled into my head to articulate my words and so on and so forth. And so I do find myself, I have to catch myself judging people if they can't speak English well. If I can't understand exactly what they're saying, you start to say, okay, that's a different kind of experience. Where are you from? So you're saying you had, as a young girl, 18, 20 years old, you felt this judgment that many poor people and struggling people feel because whether it's the language or money or class or education or whatever, they feel they're being observed negatively. You felt this because of your accent coming in.
Well, absolutely. Every time, especially when I first arrived in the United States, every time I would speak with somebody, and I arrived to a predominantly agricultural area in Central Valley in California. So this wasn't an urban metropolitan area. So I was a little bit of an oddity. And every time I would speak and I would say something, it's almost, I think some people really out of curiosity are like, "Oh, where are you from? You're not from here." And every time, even if it was well-intentioned, it exacerbated, "Oh, I'm not from here." And it is so evident I don't belong. And after a while, you kind of start building up defenses about it. And like you, I wanted to speak English as well as I could and enunciate and be able to have a good vocabulary. And really the path to be respected in the United States and be accepted and feel like I'm a member of this society for me was education. So even if I were hungry and I couldn't afford food, not affording education was not an option. So every penny I had went to pay for my schooling. And essentially, decided to become a lawyer, finish law school in the United States. And it wasn't really until a few years of being a lawyer that I started feeling like, okay, you know what? I belong. I've earned my place here. I now belong. And that journey, frankly, took over 10 years. The
Wow.
sense of belonging, in the United States basically took 10 years, over 10 years. I would say it took about 10 or 12 years out of my 30 that I've now been in the United States. So the good news is that for more than half of my life in the United States, I felt like I belonged. The bad news is that it took some time, and it wasn't until I was educationally positioned to be probably in the top, few percent of educated Americans with a law degree in my hands from a good university, that I felt finally the sense of, I earned my stripes, I belong. And then I went on this mission to basically enable others to belong and to make people feel that their experience, or however diverse, however heterogeneous, however, good or bad, actually there is a story to be told, and I want people to tell those experiences. And now even through our financial inclusion efforts, I want those experiences to be told so that we have a system of belonging. And I call that being a shareholder in the United States of America. When you know you belong, you actually want the system to work better for you. You have a stake in the system, and we all then work as a unison in making this system better for everybody. And it wasn't until probably about 13, 14 years in the United States that I felt like I became a shareholder in the United States of America.
So as we pivot to the work, we go through the prism of relationship capital. And what I keep telling folks, Madam Chair, is if you hang around 9 broke people, you'll be the 10th. Whatever you hang around, you will be. Democrats tend to hang around Democrats. Republicans tend to hang around Republicans, and so on and so forth. Without getting political at all, I'll tell you, and I never said this to you before, some people used to ask me, can you trust her? I mean, she was appointed by a former president who, was a party different than many of my friends, and maybe a philosophy different. And I had, you had to be separated as an independent thinker in their mind. You were from, you had this accent. You were just very unique, a woman in this role, and I actually could relate to you because of the journey we went on, but also just the first time I met you, I just put all that aside, and I could discern your authenticity, that you were a real person. And I don't know what you felt about me, but I think we have built this trust and this rapport because we figured out what we were for versus obsessing about what we were against. And I think that this relationship that we have, this friendship, which has allowed us to do great things for many people, is what many people need to be focused on in this country now, that everybody in the world wants to be an American, it appears, but Americans. and us fighting against each other only benefits foreign interests that want America's place in the world, because they are unified and we are not. And so I wanted just to commend you for your role in reaching over to me as my team has reached over to you in trust and confidence. And that trust and confidence has been absolutely rewarded with you keeping every word you've ever given to me, or by extension, the poor people and struggling people for whom I represent. So as we pivot, we talked really the last substantive time before the pandemic. We've traded notes, but we've been busy. You've been busy. What has this pandemic 2020 meant to you and your work there at the FDIC? Has it grounded you? Has it confused you? Has it frustrated you? Has it focused you? And what are the things that have come out of the pandemic in this era of 2020 for all it represents that now focus you?
Yeah, it's a great question, John. And I'll tell you this, I would never say that the pandemic itself was completely unprecedented and unexpected. But, crisis management is something that I feel like my brand is crisis. I came out of a country that fell apart and came to the United States, had to struggle, went through many personal crises along the way. And my experiences professionally actually shaped me for the moment last year when the pandemic was upon us and there was widespread economic activity shut down throughout the United States. And the first thought that came to my mind was, we are not going to have the repeat of 2008. I am not going to sit here and allow us to take so long deciding how to do this or that, or is this X or is this Y? We're going to take bold actions. We're going to take them at whatever political cause they may come to us because they're the right thing to do. And so early on in the pandemic, I reached out to bank CEOs and I basically said, the banks that we supervise, and I said, listen, we need you to work with your borrowers. We have no idea what's going to come out of this. What tools do you need to work with your borrowers? Make sure people can stay in their homes, have access to capital, access to credit. We can't have the repeat of 2008. What's going on the ground? And almost universally, they said, we want to modify these loans. We're trying to work with our borrowers, but there's an accounting treatment that's basically prohibitive for us. It's going to penalize us. It's called impaired debt. Whenever you restructure a loan, it's called troubled debt restructuring, and you cannot unstructure it. And then the examiners at the FDIC and other financial regulatory agencies don't look favorably upon this impaired debt. Yeah. And so what we did was basically work with the Accounting Standards Board to make sure that loans modified for the purposes of the pandemic don't end up in this category of negative loans. We did a number of things that, frankly, I call regulatory actions that I call regulatory whack-a-mole, but we were trying to whack-a-mole before the mole ever showed up. Just because I remember in 2007, actually, I had the distinct honor of actually being a consumer protection attorney at the Federal Reserve. And I remember getting calls 2007, 2008, 2009 from consumers who were desperate to refinance their mortgages. They didn't know where to send the paperwork. They've sent the paperwork 3 times. The banks were not, the paperwork never reached the bank because there were some mortgage servicing issues. There was no clarity on who owns the loan. And I was determined I'm never going to sit through those hundreds and hundreds of calls we had to handle back then as government was working through HAMP and HARP refinancing programs and TARP. We're not going to do that. We're going to act. And you know what? If later people are mad at me politically or otherwise, let them be mad at me. And so we acted very swiftly to make sure that people can stay in their homes. We provided flexibility for banks to basically dip into their capital buffers, which regulators generally don't do. Regulators don't say, hey, go ahead and dip in your capital buffer. Every bank has a minimum capital level and then a buffer. And we like them to have that buffer because it's safe and sound and makes us feel better about the stability of the financial system. But we recognized early on that this is an extraordinary time. Never in our history, at least in the history of the FDIC, did we have widespread shutdown of the economic activity throughout the United States. When you think about World War II, which was, the last massive war United States had, there was some shutdown because of the supply issue, and we needed people to be in the factories and produce ammunition and other things. But we never shut down the entire economy. And so no matter what, we were determined that we're not going to have a repeat of 2007 and 8. And I said, you know what? Let it be what it is later, but let's make sure people can stay in their homes. So we have all those initiatives listed on our website.
Yeah, I want people to, so if you're on Wall Street, you understand everything she just said. If you're from Main Street, you're like, what the heck did she just say? We're going to make sure that we list out we're going to unpack hemp and all these different programs so you can understand even what the FDIC means, so we can sort of unpack this language, which again, she says with so much confidence. And if you're a woman watching this anywhere in the world, you should be so proud and so emboldened about what you can do, because she's running circles around most men in every meeting she walks into. One thing she did say that I want everybody to underscore. 2009 was really bad. And I remember being in the White House, in the Treasury Department, where they were trying to just literally paste the economy back together because banks didn't want to lend to banks and so on and so forth. But this was, as she just said, worse than that. And really, I would argue going back, almost as worse as the Great Depression in the early 20th century. The economy just stopped. And if it wasn't for the FDIC, the Federal Reserve in particular, I think she would agree with me, the Federal Reserve and then the FDIC and the OCC doing very decisive things, we would all be in a world of trouble and asset values would have plummeted. So thank you for doing what most people don't understand you did. The history books will treat you well. Let's now talk about the things, Chair, that people actually understand. What did you do specifically? Let's get out of philosophy and theory. Specifically, what actions did you take that reaches the average everyday person? And I know you use technology, and I'm fascinated with why you thought technology was so important. But you reached you and I talked to Twitter. I heard you talking about Microsoft. tell the audience a little bit about some of the innovative things that I think no other FDIC chair has ever done to try to use your platform as your position as a platform for reimagining access.
No, absolutely, John. And I'll tell you this, a lot of people, especially in Washington, if you're a regulator, innovation and anything new that doesn't fit, round peg in a round hole, square peg in a square hole, anything that's outside of that realm is basically scary, right? Because we're risk averse, we're supposed to be risk averse. And if you're a deposit insurer, you're supposed to be extra risk averse. But I'll tell you something, I think if we turn a blind eye to technology and innovation and the opportunity, the potential that technology and innovation have, we're going to do harm to Americans. And we're going to do harm to Americans, frankly, that are 620 and below in credit scores. They're traditional subprime borrowers. They're people who don't have access to financial services or don't want to be a part of the financial system or don't know how to become or have become disenfranchised with it. So when we talk about technology, there are so many opportunities for regulators to be open-minded, to include machine learning, alternative data, to basically look at how some of these technology, fintech, financial technology firms have been able to extend credit to 620 below, and in some cases 520 and below. I mean, 520 and below is basically you cannot get credit in America. You cannot get it through the banking channels or any legitimate source. So it's one of those things that, frankly, we have worked through our channels internally to make sure that innovation and technology are at the forefront of our agenda. The idea here is financial inclusion. We know from the survey that we do with the US Census Bureau every 2 years that about 7.1 million Americans are unbanked. American households are unbanked, which each household is 2-point-something people, right? So we're talking about 15 plus million Americans that are unbanked, meaning they don't have a basic checking account. Forget a credit card. Forget that Ninja credit card, that I wanted 30 years ago. They don't have a basic checking account. So we have done a number of things to make sure that innovation technology are being used, that we encourage banks to enter into partnership with some of these fintechs to provide banking services to populations that have been traditionally underserved. We're working through a number of things. We're updating the Community Reinvestment Act, that basically was passed to ensure that there's no redlining in neighborhoods and that banks serve the populations where they take deposits. And so we're trying to see how can we be innovative and use technology to better understand who are banks serving and how to make sure that those neighborhoods get appropriate banking channels. We're also working on a number of initiatives inside the FDIC to make sure that our supervision is utilizing technology and innovation for the betterment of the system overall. And I would say that, again, if you go to our FDI Tech, our innovation lab on FDIC.gov, and if you look at some of the initiatives under general innovation, truly, I would like to think that we have been at the forefront among the regulatory agencies in making sure that innovation and technology are enablers for people who don't have access to financial services, and also enablers for entities that would like to provide those services to the underrepresented populations in our banking system.
So under the theory of social justice through an economic lens, which is what my philosophy is, that we're in this era where civil rights was won in the streets, but silver rights, SILVER, will be won in the suites, the business suites, the corporate suites, the government suites, that this is an economic challenge we're having. It's not, the issue is not red or white or black as in race, or red or blue as in political party, which I mentioned earlier. This issue should be nonpartisan. It's green, at least in the US, economics, social justice through an economic lens. So Chair, let's be, again, I want people to leave here with a very specific understanding of why I respect you and why you go to bed every night feeling so comfortable with yourself, because of what you've done, not what you philosophized about, or even, words can be cheap. You have backed those words with action. PhDs are good, PhDs are better. There's a mission-driven fund, I think is what it's called.
Yes.
That you've done there. Tell us a little bit about that. There's something you've done with Microsoft.
Yes.
I think. Tell us what you've done there. Let's be very specific in the last few minutes we have about what you've done that people
Absolutely.
can relate to.
Absolutely. It's all about this, right? So early on in my tenure, I became chairman in June of 2018. I met with a number of minority depository institutions. These are banks that are located in inner city neighborhoods, rural communities. They serve specific populations. They're usually low and moderate income populations. They're usually communities of color and communities that have traditionally not been able to get access to capital and banking services otherwise. So they're called MDIs, minority depository institutions. I met with a number of them, and I specifically talked to the CEOs of Black banks in the United States. And there unfortunately aren't that many Black banks in the United States. So I was able to talk to a number of the CEOs that represent those communities, as well as Native American and Hispanic and Asian communities. And it became very clear, especially with regard to African American communities and African American banks, access to capital is what they need. Getting capital, competing for that capital with bigger banks, because they're kind of a mission-driven means that they have patient investments in their communities. They're not looking for the highest yield. They're looking for the best outcome for the community when they lend. So it's a different business model. And so I've been thinking a lot, how can we help minority depository institutions and Black banks in particular? And I was flying someplace over the United States, and there was nothing good on DirecTV on the plane. And I believe I had a government rate middle seat, so it wasn't really the most pleasant experience. But then, as I was switching channels, there was Shark Tank, an episode of Shark Tank, and I was like, all right, let's watch Shark Tank. And by the time we landed, I had this idea in my head: why not have a Shark Tank for minority banks? And so I called up my chief of staff and I said, Brandon, we're going to have a Shark Tank for minority banks. We're going to have what? Shark Tank for minority banks. Make it happen. So we had to go through the legal channels, but 2 years later, here we are. We actually have just launched 2 weeks ago our mission-driven bank fund, which is a capital investment vehicle behind this idea of a Shark Tank. The FDIC has we lended our brand, we lended our reputation, we lended our strength to this, but we're not funding it because we can't fund it as a government agency and under our statutory restrictions. So basically, we're so pleased that Microsoft, Truist Financial, and Discovery have stepped in, Microsoft and Truist as anchor investors, Discovery as a founding investor, and collectively they have pledged $120 million to the mission-driven bank fund, and it's just the beginning.
Whoa, slow down. Say that very slowly.
$120 million.
There you go. Now this, and no other FDIC chair in the history of this agency has ever done anything like this. I think you're to be applauded. I'm sure you were criticized. I'm sure people said, wave their hand, you shouldn't be doing this. I don't know how you not do this, given what we all saw in 2020. And Black bank numbers, unfortunately, are going down. There are less banks, the Black banks, than existed 50 years ago, and certainly that existed 80 years ago. The numbers is going down. And this is in an effort to stabilize and hopefully cause the reinvestment of bank capital as well as intellectual capital. We need people to volunteer. If you're watching this, if you have an expertise, you're a retired banker at some major bank, you can lend yourself as a loan executive to one of these institutions to strengthen their intellectual capital. They need technology, they need human capital, and they need financial capital. And then they need what Operation Hope can help them with after they have all that, which is community trust and connectivity, so they can compete with the other institutions to help to lift communities up. So I really want to thank you for that. It was pulling teeth get you to brag on yourself, but that's just your nature. Is there? Unfortunately, we don't have a lot of time. You've got a government to run, but is there anything that you want to leave the audience with at this moment of inflection, where people are really reimagining who they want to be for the rest of their life? That we realize the country can't go on this way. We can't go on throwing rocks at each other. We can't go on being experts in what we're against. We can't go on being professional critics. We can't go on being negative. We've got to build. Any source of inspiration or suggestion that you might have for those listening, be they Main Street, a nurse somewhere, a teacher, a firefighter trying to come up, or be they Wall Street, in this case, a bank that is afraid to think innovatively. And as you wrap up, Madam Chair, if you could just simply give people who may not know a sense of the texture of your reach, how many banks, asset size, relevance to the economy. Over to you.
Sure. So I'll start with that because that's the easiest thing to do. There are about 50, 100, 5,000 banks left in the United States. We used to have 30,000 at one point, and the FDIC insures all of them. And there's about over $17 trillion with a T, dollars in the deposits in that system that we insure. But on top of it, we are the primary federal financial regulator for about 3,600 banks. And so that's our reach. We're basically in every corner in America. And when you walk into a bank branch, you see insured by FDIC. And that should give you a good sense of safety and trust in our financial system. But what I would like to leave you with, John, and by the way, thank you for holding this forum. I know you have held it over the years, and you have really brought the issues of financial inclusion and belonging to the forefront of the national discussion, even before the tragic events of the last year and a half. But I'll say this, the United States of America is a country that is always evolving, and we can make it better. I have lived elsewhere. I've been in different society. I've been in the societies where, in a couple of countries that you cannot transcend your socioeconomic status. What you were born into is what you're going to die in. And in the United States of America, that is not the case. We need to find a path for everybody to be that little immigrant like myself who arrived here 30 years ago with $500, got educated, and now runs the FDIC and insures $17 trillion worth of deposits. We want to find a path for financial inclusion through empowerment, through the partnerships between banks and the communities, through partnerships within mission-driven banks and non-mission-driven banks, regular banks. We want to find a path to economic inclusion through technology and innovation. And we certainly want to capitalize institutions that have been at the forefront of fighting social justice and civil rights and trying to expand financial inclusion in communities that have been traditionally underserved throughout mission-driven fund. And so if I can make a little pitch for the mission-driven bank fund, I'll say this. Please join us if you know of corporate entities that may be looking for good sources of investment where to put their money and do well. The leverage in this fund is going to be 1 to 10 in lending, meaning for every dollar that corporations put into this fund, there's going to be up to $10 of lending activity in the communities to make sure that there's home ownership through which we can build wealth and equity for generations, that there is access to student loans, small business credit. Let's alleviate the issue of food deserts by funding businesses that provide good food and resources in communities that don't have them. So we're looking at currently at $120 million. That's going to be expanded up to $1.2 billion in terms of leverage, 1 to 10. And we're hoping that the fund can grow and do so much more in the United States. So thank you, John, for this opportunity to discuss the fund, but above all, thank you for the work you've done to make sure we're all better.
And now you all know why I respect and like her so much. She's the real deal. And she is, you don't do business with companies or governments, you do business with people. I trust her completely. You should too. And you should lean in to this moment in history to figure out what you can do to help us all come back better. The next 10 years, I believe, will identify and really define the next almost 100 years, I believe. What do we do now matters. This is social justice through an economic lens. This is a moment in history. This is where you and I and what we do counts. What she has done has counted, and that means more than counting $17 trillion. Thank you very much, Madam Chair. Thank you very much, audience.
Thank you, John. God bless you all. Thank you.